The price of gold continues to rise substantially in spite of decreased demand out of China and a dollar index that has now been above 99 for over 10 days straight. I think the main reason is that professional money managers are starting to, more of them are even starting to accumulate more and more exposure to gold on the dips. Now, these are the mainstream professional money managers that wear very expensive suits, that want to go on CNBC or Bloomberg and wait a couple hours in a movie studio, in a TV studio, for 2 to 5 minutes of airtime to promote their money management firm. So these guys tend to believe the government numbers, whether it's the cerveza problems in China or what the other governments are saying or the government economic data. So they tend to believe these things. So they're starting to become very, very skeptical about all this, with the amount of infected people rising rapidly in South Korea, in the Diamond Princess cruise ship, Japan, Singapore. Looks like they may have things. Things have calmed a little bit down in Singapore. The amount of people infected is not rising rapidly, but we also have problems now in Italy and also in Iran. So professional money managers are looking at this, and they're going to more safe haven types of assets, which are treasury bonds, cash, which is normally dollars, and also gold. So that's what these safe haven plays are. Normally the dollar and gold, for correlation's sake, tend to not rise together unless a lot of people perceive, especially professional money managers, that we are in a crisis scenario. So it looks like with the big pops that we're getting in gold, and we got another one tonight, that we could be at $1,700 an ounce very quickly, perhaps in a couple days, perhaps by the end of this week. Let me know what you think below the video. But I wanted to talk about some analyst comments that have come out recently. This is an article that came out in the Financial Post quoting a Citibank analyst that gold could hit $2,000 as investors seek protection from the cerveza problem in China, and how Asian economies are also declining rapidly and problems with the global supply chain. This article is by Kevin Martin, and he talks about how Citibank Group believes gold prices could hit $2,000 per ounce in the next year. Fears over interest rate cuts by central banks, as well as economic headwinds caused by the cerveza problem, could cause investors to hedge stock market risk by buying gold. And I think what's happening, like I said, is professional money managers are the ones who are buying gold on dips, because the Chinese economy is not doing well. There's not as much trade surplus, not as much profits in the Chinese economy, because the Chinese economy has basically stopped in many different aspects. There's not as much profits or trade surplus to recycle into gold. The new gold demand for the last few months has been from professional money managers buying gold on dips. More people, as I've been saying this now for a while now, have been buying gold on dips. And now that we're seeing a lot of evidence about the global supply chain, which hopefully I will discuss on another live stream show in the near future, go into more details about the global supply chain. Citibank said in a note this past week that more people are hedging risk and buying gold. Quote, while negative real yields are also supportive for equity markets, gold can further outperform on a risk market unwind should the cerveza problem risk impact supply chains and thus U.S. earnings momentum, the Citibank note said. Quote, we still expect fresh nominal highs of $2,000 per ounce to be breached in the next 12 to 24 months. It is interesting that these investment banks are now bullish gold, but I think it's very obvious to many professional money managers and business people that the global supply chain problems are very real. And over the next couple months, things are probably going to get a lot worse before they get better, unfortunately. Finally, this slide is about PDAC, Inspectors and Developers Association of Canada conference that's coming up. And this is the biggest mining conference of the year for gold miners and all other types of miners. And normally what happens, especially with higher gold prices, is we could see some more mergers and acquisitions done. So you may expect to see then over the next month or two after this conference is over, you may expect to see some fairly large deals, some more mergers, some more acquisitions. So with a rising gold price, we'll see if some of these juniors or some of these miners that could not raise capital will be able to raise some capital. And if they can't raise capital now with a higher gold price, the producing miners have better margins, especially with a lower gold price. So those producing miners that have good margins with a lower oil price, with a lower oil price, I think I might have accidentally said gold price a second ago, but their margins are now with gold prices this high and oil prices lower. These are good margins. Unless the management team is doing a really bad job or there's production problems at the mine, I could go on and on. But overall, the industry should be the producing miners, unless they're not doing a good job at running the company or at individual mines. Overall, the industry should be in much better shape. Now, I don't know if they're going to be able to raise massive amounts of capital, but the producing miners are going to be looking now at potentially acquiring some mines, some juniors. I don't know if these juniors are going to be bought at premiums, but they are going to be looking at buying assets to replace mined reserves. Overall, I would say that the gold price has an enormous amount of momentum. Now, it is not from Chinese buying. It is from professional money managers, what I can see with price action, who are going into dollars, who are going into US Treasuries, and going into gold. We have not seen stocks crash yet, but I think that's central bank support. But the amount of demand for regular mainstream financial professionals, these are the guys often who won't agree with anything I say, but now they're buying gold because gold's going up. These are the guys who wear very expensive, stuffy suits and normally don't agree with anything I say. And I've met them in the past working in the financial industry at regular jobs. There was one funny story. There was one coworker I had who was an analyst, and this guy thought that gold was worthless. He actually was saying that, it has no cash flow, no yield, you can't value it at all. And he was saying that anyone who thinks it's worth over $1,000 is a moron. I think he's going to be proven wrong in the years to come. Let me know what you think below the video if you think that gold to $2,000 an ounce is going to happen in the next 12 months.